Good afternoon. This is Tom Alexander. It is Thursday, August 15th. It is about 5:15 a.m. Eastern Time in beautiful Charleston, South Carolina. This is a special midweek update, stock market update I'm going to do because I think something could be important about to happen. Those of you that have followed my work for years, I've been doing this for almost 30 years. Just the advisory part, I've been trading for almost 40 years, but I'm not into the drama. I don't have a business that is predicated on making dramatic calls, either dramatic tops, dramatic bottoms. I'm a trader, so I just try to trade the market in front of me. And it's extraordinarily difficult to call tops and bottoms, as anyone that's been trading more than 15 minutes knows. However, there are signs here that are pointing to the potential for at least a short-term top and potentially a top of more significance than that. And I really didn't, I was writing my report tonight for the membership that I do every single night. And I kept seeing more and more things that were head scratching and seemed to be all coming together, pointing to something that could be important. So I wanted to share that with all of you. Now, if you find value in this, I'd very much appreciate it if you would subscribe to the channel. If you would like the video, you can go to alexandertrading.com. Here, I will show that screen. And all right, this is the website, alexandertrading.com. Click on weekly update, and you will have the update for that I'm doing now. And you'll be able to see all the charts. You'll be able to see all the levels at your leisure. You can go back and you can look at other things that I have said at various points in time. Okay, so let's talk about the market. Excuse me. Okay, the SP, we've had this incredible rally off of this low. We had this sort of mini crash a week and a half ago. The world was coming to an end. It was the grand Armageddon all-time wave 5555 nuclear high. And here we are a little bit more than a week later, and we've retraced 90% plus of the gain of that loss back to the upside. So much for predicting the end of time again. But back to the point at hand. So we're only 2.2% away from a new all-time high. Now, it's even if I'm dead wrong about that we're forming a top of significance in here, and I do think we could be forming a top of significance. This rate of change off this low is not sustainable, and we're closer and closer to some sort of short-term top. So that's not a dramatic call. Anybody that studies the market for any length of time is probably going to come to the same conclusion. I mean, this rate of change is ridiculous. We've had gaps, consecutive gaps this week, and everything is sunshine and roses, and all the economic reports are being received favorably, et cetera, et cetera. I'm interested in price action. I analyze and trade markets through the lens of auction market principles that are immutable. I'm not going to give a lesson or lecture on that tonight, but that is my lens. And this is a rate of change that is unsustainable. But we're only about 2.2% away from a new all-time high in the SPX. Now, this is where I started this afternoon when I was writing my membership report. The evidence started to pile up. So this is the SPX. This is another view of the SPX. And this is a 30-minute breadth page. And this is breadth below here, this red line, this oscillator-looking line. It's NYSE, advancing minus declining issues. Now, this can be very helpful at times. In bull trends and bull markets, it's not nearly as helpful as it is in bear markets. It's never as helpful in bull trends or bear trends than it is at identifying lows. It does a really good job of helping to identify lows, not so much highs. However, because of the fact that we have been so vertical and we are right at a key reference area, an inflection point in the market that could be, I don't like to use the term support and resistance. Most of you know that I don't like those terms for obvious reasons. Key reference areas are areas formed by the market itself. They are auction market levels. They represent activity that has actually occurred between buyers and sellers, and therefore they are important. I don't use magic numbers. But this is an auction market level up here, not too far from where we closed today. And we also have a market that you can see has been accumulating. You know, when the market, you have breadth at the levels that we've seen over the past week. That's accumulation. Now, this particular view of this looks like, oh, wow, you know, this breadth is really good and really strong, and here we are off to the races. Now, this is where it gets really interesting in my mind. Let me go to this view. All right, this is the New York Composite. Now, the New York Composite is every stock listed on the NYSE, so it's the broadest index that I follow. And below this chart, you can see three indicators, and really they're really not indicators. The red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues, and the blue histogram is breadth, just net NYSE closing breadth each day. Now, if you look at this, it's somewhat head scratching because the 10-day moving average of NYSE advancing issues and the 5-day, but in particular the 10-day, really diverging strongly. Even if the New York Composite were to go up 2 or 3 more days, it would be hard pressed to see how the NYSE takes out this level that it made on the 16th, which was the closing all-time high in the New York Composite. So this got my attention. The other thing I want to point out, it looks like one or more of the indices may trade to a new all-time high, and some of the others not. Now, this is a situation that occurs at almost all significant highs, both all-time highs as well as secondary important highs. You have divergences among the indices. Now, you get a lot of false signals too, but it is something that almost always occurs at important highs, and it looks like it's going to occur now. It looks like, for instance, the NYSE, I mean, it's just a fraction away from a new all-time closing high, or print high and closing high. So let's take a look at the position of the other indices and see how they're lining up. So this is the SPX. Go to the INDX. Now the INDX is a long way away, relatively speaking, to a new all-time high. It's 6% away. It is also right at an auction market level, a key level here, this gap in here. Okay, let's look at the Dow. The Dow is also pretty close to a new all-time high. It's a little less than 2% away. And then the Russell, of course, is the farthest away from a new all-time high. So it's extremely likely that even if we see new highs in the New York Composite, the Dow, excuse me, I'm getting over COVID. That was fun. Anyway, so we're a long way away from a new high in the Russell. I don't think you're going to see a new high in the Russell prior to some sort of reaction to the downside. We're close to making new all-time highs in the NYA. I'd be almost surprised at this point if that didn't happen. But if and when it does happen, you want to be paying attention to the reaction of all the indices. We are potentially setting up a significant high, and I think we're very close to setting up at least a short-term top. So we'll see what happens. You guys enjoy the rest of your day, enjoy your weekend. And again, if you found value in this, please like, please subscribe. I'll speak with you again soon.